They're bleeding so heavily that they literally have had to freeze buying homes. This is Zillow, folks. This isn't a small company. This is a ginormous conglomerate that now has realized the mistakes that they made by overpaying in a speculative market. They have frozen new purchases of homes. But everybody else out there is clamoring to buy real estate.
The Fed kind of leading the way right now. They have a major meeting later today that they're going to announce kind of what they're planning on doing to try and attack and curb inflation that basically they've created by printing all this money, along with the policies of shutting down all the employment supply chain and everything like that. But they're the ones that are trying to lead us out of this mess. But they're the ones who just had to restrict their own trading activities when they were caught red-handed selling before these major announcements and shutdowns and everything. So we're being led by a group of proven criminals, essentially. Good freaking luck with that, Chris.
Stephen, I don't even know what to say. I mean, if by now you all don't know that the Fed is just a bunch of freaking lying, self-absorbed idiots that really don't know anything. They come up with these bills that are this thick. They don't read any of that. They just push it through because of self-interest and lobbying efforts. It's, and not only that, they, for some reason, are able to do things that we are not able to do. Right there, this one, Stephen just posted, inflation is at a 30-year high. Here's how the Federal Reserve plans to deal with it. Ooh, do tell. How are you going to deal with it? What do they say, Stephen? What do they say? What is the fake news telling us they're going to do to fix inflation?
Yeah, good luck. They're announcing it later today.
Good, huh? I can't even read it. It's too small. But all of you should look at that. What is the Fed going to do to solve your inflation problems? The answer is nothing. You have to solve your own problems. Stop sitting back waiting for the Fed and for the government and for your state to solve your problems. Your problems are your problems. Read the book, Life Strategies by Dr. Phil. Oh, I did say it. I read that back when I was a teenager because I needed to get off of that mentality, that mindset of blaming everybody else for what was happening in my life. I don't like Dr. Phil, okay? But that book changed it all for me because that book said one simple thing. Whatever problems, whatever things you have happening in your life, they're your problems to deal with, no one else's. It doesn't matter if that problem was created by somebody else. It doesn't matter if you invested with a Ponzi scheme and they took all your money and boo-hoo, it's their fault. It's your problem. It might be their fault, but it's your problem, so freaking deal with it. Go out there, get a second job. Go out there, work harder. Go out there and do something that gets you ahead so you can start saving money. 1/10 of your income is the law. Law number one, save 1/10 of your income. And if you're not doing that, how do you ever expect anything to change? Oh, the government's going to bail me out. Oh, you're one of them. Great. Wrong place. You shouldn't ever come on what the F happened. This isn't the right space for you. The right space for you is to go play with the other sheeple that all think that somebody's going to solve their problems too. Sorry. I try to do this to create haters because I'm trying to thin out the people that we're speaking to because I don't want to talk to people that don't want help. And unfortunately, people that think someone else is going to solve their problem, they don't want help. They just want somebody to solve their problem. And I'm sorry, in this world, the cavalry isn't coming to save you. It's your time to stand up. It's your time to raise the torch and say, follow me. I will lead you through the darkness. Solve other people's problems. Be a man. This good times that we've been in for far too long. We've been in a bull market for a longer period of time than any other period in history. And it is creating weak men and women. It is creating broken mindsets, false realities, and false hopes. Read the book, Hard Times Create Strong Men by Stefan Arnio. He's passed away since then, but that book sums it all up. I swear to God, the man was a prophet. Anyway, I'm off on that tangent. What else can we talk about that's going to give some tangible stuff? Let's get to Zillow.
Yeah, just since this isn't. Let's get into Zillow. But just so everybody knows, the Fed is just planning on keeping the rates near zero and stopping some of their purchases. They've been purchasing $120 billion worth of bonds every month, so they're going to start tapering that down a little bit. That's their plan right now.
Okay, so
Just
same thing they've been saying for a couple of years. How is that solving the problem? You know what that means? Any of you that want to know what that means, what he just said about the Fed's plan to just keep rates close to zero. I want you to study Japan. I want you to study what happened to Japan, because Japan got themselves backed in a corner and they had to keep interest rates low for an extended period of time. And you know what? If you do the research on that, it didn't work out so well for them. And the US said, we're never going to do what Japan did. And here we are doing exactly what Japan did. Oh, but it's different this time. Fuck you, it's different. It's the exact same shit. You just want to make people believe it's different. It's the same thing the US government's doing. The US government can't raise interest rates. Do you know why? They will slowly, because they have to move it up, because when the market tanks, they have to pull the interest rate lever. So you're slowly seeing rates go up, but they're not going to make big moves. It's going to be a basis point here or there. Here's why. Anyone look at the US deficit? How much money is the US government printing? How much money is the US government owe in debts to other countries and other people? Well, the answer is just too much. I don't even know. But if the Fed raises interest rates, that means that those debts, when the US Treasury bond goes up, that means the debts become more expensive for the government. They can't do it. We're almost, I don't know where we at. Stephen, can you look up and see the US government or the US, we'll just say the United States of America, where is their GDP to the amount that they spend? So our gross domestic product is kind of the measure of how much money the US brings in and how much of that GDP do they spend. Is it 90% now? I remember it was high. Does anyone know? Does anyone know what the GDP is in comparison with the U.S. debt service? Like what the U.S. government has to spend? And if any of you have ever read the book, The Power of Zero, it really sums it up really well. Between Medicare, Medicaid, Social Security, debt services on U.S. treasuries and debts that the U.S. government has, the military, and every social service program the U.S. government has, how much does the U.S. government spend of what they bring in? So that would, I can tell you, Stephen's looking it up and he'll have the answer in a second, but it would be the equivalent of you going out and working for your money and spending more than what you actually earn. Does that work? No. How many people right now, truthfully, all of you that know this, how many people right now are living off of credit cards? Seriously, like how many people do you know that actually don't make enough money to sustain their lifestyle? In other words, they're violating another rule, which is a rule of prosperity, live below your means. Okay. How many people are living above their means and supporting that imbalance with credit cards? I bet you it's like 60%. I don't know. I'm just curious. We got tons of questions. Today we got Instagram's being a little slow. No one's really chiming in with questions, but TikTok's all over the place. Who just said that? So Rock Rose Sober. We're going to talk about Zillow in just a second. Stop buying houses. That's actually pretty good advice. So like I said, we're going to get Coco Presario on one of these. Are bonds good? Bonds are good if you're looking for a safe place and you understand the inverse relationship to interest rates. Bonds, AAA rated corporates or US Treasury bonds, they can be a great way to store your capital so that when an opportunity presents itself, you actually can act on it and you can make a little bit more than you are in checking and savings. But the other thing that you got to look at bonds for, and this is how I play them, is when this whole thing does go to hell in a handbag, okay, when it all drops and goes down, bonds will go up. Look at last year with COVID, when the market tanked, Treasury bonds skyrocketed. Look at 2008, when the markets tanked, Treasury bonds skyrocketed. But you got to know how to buy low and sell high to do that. What do we got here, Stephen?
Well, this is the good old U.S. debt clock. So this will pretty much sum everything up. But I mean, almost $29 trillion in national debt now, and that just keeps climbing every millisecond.
Yeah, it's not going down, folks. These numbers are climbing quick, and you can all look this up. It's usdebtclock.org. So that's our debt. So to service that debt and everything else, how much GDP does the U.S. government have to bring in? Well, the question is, and there's been a lot of books on this, from the Creature of Jekyll Island all the way through. There was a point that we crossed many, many years ago. Heck, might even been decades ago, where the U.S. government crossed the point of no return, where the government technically can never pay off their debts because we crossed over, I think it was 60% of GDP, or maybe I'm off a little, and we're past that now. So where are we now? Are we 80% of, the expenses to GDP, or are we higher? I think we're higher.
So total debt to GDP ratio is 140%.
Wait, well, can you just repeat that for the audience? Because I had no comprehension that it was that high.
The total debt to GDP ratio right now is 140.33%.
140.33%. Folks, holy shit. That would be the equivalent of for every dollar you make, you spend $1.40 plus. That's what that is. Is that sustainable? Can that be mitigated? Can that be paid down? Hell no. I don't think so. They can tax you. You are at the lowest tax rates you guys were ever going to be at. So if you think you're paying too much in taxes, well, you should actually just you should send a thank you card to the IRS and the Fed and basically just say, thank you so much for charging me these low taxes. Because folks, like, that is the truth. These are the lowest taxes you will ever pay. And many of you are probably thinking, no, Chris. You know, Biden said that if we make under 400,000, our taxes aren't going to go up. Delusional. You are delusional. Your taxes might not go up, but everything around you will go up in cost. You've already seen that happen. Inflation is a tax, folks. It is a hidden tax. So even though they don't tax you, you are going to be taxed because they're going to tax the people that make the goods and services that you buy. And therefore, the cost of those goods and services go up because the buying power of the dollar goes down.
Well, look at home prices. When your home increases, your property taxes increase. So everybody that has all this equity now is paying way more in property taxes. It's a huge problem in New York and New Jersey right now, I know, and all across the board, really. So it's all these little hidden things. Just because your quote unquote income taxes you pay to the federal government every year are not increasing if you're in the middle class, everything around you, everything you do on a daily basis, the gas you put in your car, the insurance you pay, your health insurance, all of that stuff increases, and that's all a tax on you. It's just a hidden tax.
Absolutely. Catherine said, do people really believe politicians? Well, I don't think so, but maybe a couple do. I don't know. So here's one, Stephen. I want to get to this one because this is something we've been talking about the whole time, and we're just going off on these rants. But Rock Rose said on TikTok, Zillow isn't investing in homes anymore, but they're buying bonds. Is that right? Can we get into this Zillow thing? Because this is big freaking news. This is really big news. Fiddle Britches said almost need a government reset. Yeah, I don't know what the answer is. I'm not here to predict the future. I'm just here to help all of you navigate through this madness. So what's going on with Zillow?
So Zillow says it's closing its home buying business, cutting 25% of its workforce. It had an earnings miss. They missed their estimates in Q3. So Zillow said it's winding down its home buying unit called Offers, which competes with Opendoor. The company said it's cutting 25% of its workforce, and they had a disappointing third quarter result. So when we get into it, the stock dropped by about 7.5%. Extended trading followed by 10% plunge during regular market hours. Let me see here. Go ahead and talk about it, and I'll find you some data on this right now.
Steven's got this article up for those of you on TikTok and Instagram talking about Zillow, but it's pretty open stuff. You could just Google it and see it. And Drew just came in and said there was a report that Zillow was taking a $50,000 to $60,000 loss on houses in Arizona, but they were taking losses on most houses because, like Opendoor and the other iBuyers and Zillow and gosh, we could even go down the road of BlackRock and Blackstone. They are, if you guys haven't researched this, they are buying houses at full retail, at these speculative retail numbers. And Zillow went on this thing where they were buying all the houses. This has been going on for years. They were buying houses, literally saying, we'll pay you full price for your house. And they were doing that at a loss. But that is playing with fire for a company like that, because at a certain scale, they can't sustain that. Now, what Zillow was doing is they were making money 3 layers deep. Zillow also has mortgage brokerages that they own. So they were doing loans on some of these houses. So they would buy the house, maybe fix it up, maybe not. Some of them they would rent out. Some of them they would basically, go in and sell on the open market, and then they'd make their money on the mortgage. But remember, the mortgage is a 30-year. They make their money in 7 years. So they're bleeding so heavily that they literally have had to freeze buying homes. This is Zillow, folks. This isn't a small company. This is a ginormous conglomerate that now has realized the mistakes that they made by overpaying in a speculative market. They have frozen new purchases of homes. but everybody else out there is clamoring to buy real estate. I'm not saying real estate's a bad thing. If you're playing the rental game in real estate, you're probably okay. Even if you're overpaying, which all of you, just to wake you up, except for the select few that have figured out how to market and buy lucrative off-market deals, any of you that are buying a house right now, just realize you overpaid for your house. And realize by overpaying for your house, if you want to sell your house in the next, 5, 6, 10 years, there's a very strong probability that you will not ever get what you paid for that house in the near future, maybe even the longer term future. Zillow realized that fault. They froze new home buying because they're like, oh my God, we are upside down. Their investors don't like that. All of you don't like that either. So,
and Chris, real fast, that's one of the reasons why, our private money club that we have is so powerful, because there's so many people that want to get into real estate, but there's so much risk if you're new to it or you don't know what you're doing and you don't have the time to go out there and actively learn it, but they want to take advantage of those returns, right? But even like Robert Kiyosaki. So how many of you on here follow Robert Kiyosaki or have read the Rich Dad Poor Dad series, right? So Robert Kiyosaki came out overnight when he heard about the Zillow news, and he said, Zillow flipping flops. Is real estate boom about to bust? Followers of Rich Dad know I do not flip houses. I prefer properties that cash flow forever and pay zero taxes. Taxes and risk flipping are too high. Be careful. Zillow's flop, maybe 2008 again. Be aware and maybe near. So invest in the long term, the cash flow. Don't worry about the increasing taxes you're paying flipping houses. Let the professional flippers go out there and what they do. I mean, somebody like Chris Naugle, somebody like Chris Rude, and these other professional investors we work with, these guys know they get in, they get out, they get their money, and they move on to the next deal for the flips. Or if it's an opportunity to hold it long term, they do that. So as a passive investor, you can get in those types of deals and take advantage of that by creating passive income for yourself in both the short term and the long term plays. You can see behind me on Money Club Mondays this week, we highlighted a play for short term Airbnb condo rentals along the beach in the Space Coast of Florida. And these are a long term play. They're renting these things out for the cash flow. And it's an incredible opportunity for members in our private money club to be able to partner with these professional investors 50-50 on these condo units. So things like that are what you should be looking for in this real estate market right now. Learn from Zillow. This is a advanced game when you get into speculative buying and selling like that. And even someone as big as Zillow that has all the money in the world realize they can lose a lot of money because they didn't know what they're doing.
Yeah, you're absolutely right. So just be careful, folks. Like, cash flow is a great game to play in real estate. So if you're buying real estate to rent it out, rents are going up. And when the market goes down, rents will still probably, unless you're in like really high, like profile rentals, like A-class rentals, you're probably going to be fine. But just realize like the exit will disappear and you will not be able to sell and don't play the appreciation game. That's my best advice for you in real estate. And, I go to masterminds with some very high profile real estate investors. You can play the appreciation game until you can't play it anymore. So I don't know, a year, 2 years, there's a lot of demand for housing. And if they keep interest rates low, that will keep demand up. But when the bottom falls on in the stock market, 2022, 2023, it's all over. Too many people think that will not have anything to do with the real estate bubble. It has everything to do with it, because when the markets crash, people lose jobs, they lose their wealth, they lose pretty much everything. Of course, they can't afford to buy houses then. They go deeper in debt. Their credit scores go to hell. Just look at 2009, 10, 11, 12. People couldn't buy houses. So what they have to do? Rent. What happened to rents? They went up. Is the rental game a good game to play in? Absolutely. That's why BlackRock and Blackstone are buying up these giant positions in real estate, because they're renting them out. They get the game. They're at the top of the game. They understand it. And you can play the game too. Somebody had commented in here, Smoke Eater or Smoke Adder, whatever it is, said these comments are not true for Canada. Canada's a different game altogether. So most of what we're talking about on What the F is related to US, okay, the United States of America. But Canada has a lot of its own issues. So I'm in Buffalo, New York, right below Toronto, one of the biggest cities and wealthiest cities in Canada. So in Canada, China has been buying up their real estate, driving a massive real estate bubble up there, and it just keeps going. It's showing some weaknesses now because obviously we know what's happening in China with some of their largest real estate developers. So these companies and these individuals have found ways to get money out of China and move it into Canada because it's easier than doing it into the US. So therefore, British Columbia and Toronto, their real estate markets have exploded. But it's not real. It's Chinese money buying that up. I don't know exactly why. I'm sure you might know more, but be very careful in China or in Canada buying real estate. You can play that speculation game, and hell, they've been doing it for decades. I know people that have bought a condo and then before the condo's done, sold it and made hundreds of thousands of dollars. Like, bravo, because now you got $100,000 extra that you actually can go out and spend in exchange and do things. That's great. I don't know what's going on with Instagram and why nobody can hear me. I get it. Like, for some reason, I lost audio on Instagram. That's just because that's what happens with technology. So there's a lot going on in there. But Private Money KKNS on TikTok said Private Money Club has been a godsend. So that's a give Stephen a big high five for that. That's a huge one. And, I get many people over here asking about gold and silver. Is it a good buy? Gold and silver is always a good storage for wealth. I think it's both a little bit high right now, but I think it's a question.
What's everybody think about Tesla?
Tesla?
Have we seen what Tesla's done? They've equipped almost $1.25 trillion market cap, pushing Elon Musk to the richest man in the United States, and it just keeps on running. I mean, what do you guys think of this?
I don't know. I think it's a bit of a bubble. I think Tesla's an amazing company. First off, what does everybody here on TikTok and if Instagram can hear me? What do you guys think of Tesla, guys and gals? Tesla is tough.
I got this one drastically wrong. I made a bet with the guy last year, about a year, almost 1 year ago. In 3 weeks, I made a bet that Tesla would be below 600. So I lost that by like a double, right? So I owe him a steak dinner now, but but it's incredible to me. I'm just curious what other people think of Tesla.
I think a lot of Tesla, especially at the pricing that it's at now in this run, it has to do with investor sentiment, investor confidence. But listen, like, you can't argue that Tesla's a pretty well-run company, and you can't argue that they are absolutely the leader, the blue ocean leader in the electric car space. You can only compare Elon and Tesla and even SpaceX to that of what Steve Jobs did for Apple. Steve Jobs did the impossible. He did things that every engineer would have told him is impossible. Elon has done the exact same thing with Tesla and SpaceX. He has literally done the impossible. So you can't take away the fact that Tesla is going nowhere. They created a blue ocean, being the electric car space, but they're not a car company. They are a technology company. Therefore, they will still show strong volatility if technology companies show weakness, which they will. So you can play Tesla any way you want. I love Tesla. I think it's just a phenomenal company. I think it's well run. I think it's got, just tons of steam behind it, like a perpetual tailwind. And I think SpaceX is just going to be probably the wave of space travel in the future for satellites and everything else. I'm all in on Tesla. I don't own any stock right now. I've gone open saying this, so I am not buying Tesla because, again, when others are greedy, be fearful. And when others are fearful, be greedy. For me, time is just time. Patience is a virtue. I will wait for Tesla to pull back. And folks, that all of you that live in this FOMO world thinking, oh my God, Tesla's never going to pull back, we'll have a conversation in the near future. It will pull back. You will probably see Tesla hit $400, $500, $600 a share again. You might think I'm completely ludicrous and out of my mind, but you wouldn't have thought that last year when COVID hit and Tesla hit $400 and some dollars. I bought it and I sold it at 800 and something. And then when it split, I bought it again and I sold it. But I made money every single time. So you can't be upset when you make money, even though I probably should have damn well held that. But it's not the game. The game is just make money. The game isn't buy and hold forever until the stock goes down. And then when it goes down, then you sell. That's how you lose money. And that's what most people do. I love Tesla, Stephen. I don't know. Yeah. I think a lot of people are chiming in here that they love it as well.
Yeah, something Shauna was telling me. Sean Whalen, our guy at Lions Not Sheep, which, by the way, give him a follow on Instagram. Sean Whalen, he gave some good advice and was saying that he invested in lithium because batteries in Tesla, use those batteries. It's been performing for them. So, those kinds of plays too, like buying things that power companies like Tesla are an interesting investment strategy also.
I agree. I think Elon is purely brilliant. I think he's a genius. I think people give him credit, but maybe not even enough credit. I see Elon on the same realm as Steve Jobs in the sense of what his mind doesn't work like everybody else's. Hey, you don't even know. They might be both aliens. We don't know. But I would say if somebody was looking for a long hold, a good thing, I think, you could look at Tesla, because Tesla and Solar City and all that, you got to realize they've got technology in their batteries that no one else has. Porsche doesn't have it. No one else has that technology. And that technology will then spin off into other industries. Eventually, if this administration keeps pushing this Green New Deal and tries to, cut off this oil, from it all, obviously we're going to go this direction. Who's going to be supplying the batteries and the solar roof shingles and everything else, like people are commenting in, it's going to be Tesla. They are, you have to read the blue ocean strategy to understand this. They are the blue ocean. They created it. They're not swimming in the red ocean where there's other competition. They created this entire world, and they are by far so far out in front. No one is catching them anytime soon. So take that for what it's worth. We're not making a recommendation. We're not making stock choices. We're not advising or suggesting you buy anything. We're simply talking about a company and how cool that company is. That is it. You guys make your own suggestions and consult with your professionals that probably will give you their bad advice anyway. But hey, got to kind of put that disclaimer out there.
And all right. Speaking of advisors, I got one last thing I want to close on, and then I got some parting words. But the one last thing I just wanted to hit on was advisors, right? So if they're not telling you to start, be careful. But more importantly, if they ever suggest to you an IUL, Chris, what do you think of that?
Run, fire them. If they're suggesting you buy an IUL, and listen closely, folks, if they suggest an IUL for anything other than very long-term goals and life insurance, which I still would disagree, but if they do, it is for one fucking reason. Mark my words, test the contract, look at the contract. You won't get the truth from them. It is a commission motherfucking play. Holy crap, I'm sorry I said it. That is it. You damn fools that are buying IULs are feeding into the brokers making anywhere between 100 and 120% commission. Let me break that down for you if you don't know how to do math. You put $10,000 into that stupid IUL. They probably in a commission make between $9,000 and $12,000. How many of you, if you were an advisor, would want to sell an IUL? How many of you? Seriously. Everybody's hands are up both, right? It's because it's a huge commission. But for them to get that big commission, who loses? The person buying the damn IUL. I have studied IULs to the point where I just am so sick of reading these fucking stupid contracts, which are this long. Because an IUL is it's a contract from an insurance company. It is so convoluted and hard to read that the average person, none of you probably can even understand what is being said in there. I do. I've been doing this for 20 years. And I can tell you, it is a freaking bad contract. It is a really bad game for you to play. But if you're doing it for retirement, which is 20 years down the line, hey, maybe you'll get some luck. Maybe the market will remain a bull market for the next 10 years and you'll do okay. But the fees will ease it up. If
your strategy is to give up control of your money for 20 to 30 years, you're in the wrong freaking place, because that's not what this is about. That's not what money school is, what money multiplier is, and what the fuck happened is not about that at all. This is about taking back control of your money right now. And so if you're thinking about life insurance or thinking about infinite banking or thinking about any of that stuff, and you're looking at an IUL or somebody's talking to you about IULs, please, please, please call us or direct message us or email us first, because I'm sick of talking to people 6 months and 12 months later that got sold these IULs and they have zero advantage and they can't get out of them. There's zero cash value, surrender value. They can't do anything. They threw their money away and now they've lost control of it for basically 20 some years if they ever get it back. So please stop right now and at least let's have a conversation, compare the pros and cons, and let's pick what's truly right for you. Not for the agent.
And one other thing here, and listen, I know we're going harsh on IULs, but we just did a video. And I can't share my screen for some reason, but anyway, we just did a video on my YouTube. So for any of you listening from TikTok to Instagram to Facebook and YouTube, subscribe to my YouTube channel at the Chris Naugle. Stephen, if you can pull it up. We put up amazing videos on there. They're not all about the infinite banking concept or specially designed and engineered whole lives, but we just put one up and we spent 6 months. Andrew spent nauseating amount of time creating this video to show you facts, contractual facts about whole life and IULs, but not just whole life, specially designed and engineered whole life, okay, and IULs. And we did a really nice video, not saying anything bad about IULs or anything bad about whole life, just getting down to the facts, the numbers, the math. And if you watch that video, which actually I don't know if it's up, I just looked for it. I don't think it's on there yet, but subscribe to at the Chris Naugle, click the alerts button so that when we do post that video, it will be there and you will be able to then make a very accurate decision as to whether an IUL or a specially designed and engineered whole life, the way that we do them, is right for your needs and goals. And maybe the whole life isn't right for what you want, but maybe the IUL isn't. But if you are being sold an IUL, it is a commission play. If you are talking to us about a specially designed and engineered whole life, you need to understand one thing and one thing only. We are giving up 60 to 90%, most of them are 90% of our commission so that you have 90% more money to use. We are giving so that you get. That's how it works, folks. That's why the banks do it the way they do it. That's why banks don't buy IULs. They buy whole life. It's why the wealthy individuals, they don't buy IULs. They buy whole life, but not just traditional off-the-shelf whole life. They design and engineer it to do what they want. And that agent or advisor gives up 60 to 90% of their commission. So you and you alone win the money game by having access to 60 to 90% more money immediately in the first 30 days. I can't say it any better. Some people are like, well, if not IULs, what? Well, I don't know. Do the research and what solves your problem, because there is no silver bullet. Whole life isn't a silver bullet. IUL isn't a silver bullet. Bitcoin and Ethereum, they're not the silver bullet. It's called diversification, folks. But your money's got to start somewhere. And if you're putting your money in someone else's bank, you're already losing the game because you gave up control of your money. Take back control of your money, take back control of your mindset and get it right, and start doing what the wealthy do and follow the laws of wealth. That book will be coming out in the next 6 to 8 months. It's my newest book, The Laws of Wealth and the 10 Rules of Prosperity. It is literally rules that all of you need to follow in your wealth building journey. But the hardest part is, if you're chasing the FOMO and the quick get rich quick schemes, you will hate my book, and you should just buy it and burn it, because it will never help you, because you don't want to follow simple laws that have worked for, I don't know. I mean, before Christ, how many years is that? Thousands and thousands of years. The same laws have worked. So if you think that you can beat thousands of years worth of proven laws to building wealth, then good for you. Maybe you should be the one teaching the classes. Maybe you should be the one running this and teaching me, because I am a student and I will never stop learning. So if you know something I don't, like Coco probably knows, I want to learn from you. And that way you don't have to learn from us. All right, if you like that video, make sure you check out this video right now. And also don't forget, subscribe to my channel, and don't ever forget to smash that alert button. We'll see you on the next one.